You were at Brooklyn High School a million years ago, and they said, don't look out 5 years. And then you went off to undergraduate. Don't look out 5 years. Then you did your PhD work, and they said, don't look out 5 years. And here's the International Monetary Fund with a 5-year model of 3% growth. Can people like you look out 5 years?
We can look, but we may not see. I think, Tom, the IMF is making a judgment call, which is within their rights. And I think it's a reasonable judgment call, but unfortunately, I think it buries the lead, which is that we're going to get a goosing of short-term growth in the large economies, in the U.S. and China, in Europe, because there's going to be public spending on defense and on green. And there's going to be a continued falling off of growth in the poor economies, who are going to be forced to choose between U.S. and China. And for reasons, very good report put out by the IMF recently. I know you covered, very good report by the World Bank recently. You've covered my stuff. The spillovers on growth for the developing world from the U.S.-China conflict and the subsidies race between Europe and U.S. is very bad.
What to me is critical here, and David Folkerts-Landau of Deutsche Bank with some serious publishing with Dooley years ago, echoed what you said the day after Putin invaded Ukraine. So if we have the fiscal stimulus that Dr. Folkerts-Landau is talking about, you're talking about right now, and we dovetail that into your colleague Olivier Blanchard's phrase, fiscal space. Does the United States or Bolivia that we mentioned the other day, do they have fiscal space to act given the present traumas?
So you may have seen I hosted a debate or a conversation between Olivier and Larry Summers on PIE.com a few weeks ago on this very topic. And where Olivier, Larry, and I, more importantly, Olivier and Larry, came down was that this kind of sustained fiscal expansion and possibly some inflation premium that continues going forward will decrease the amount of fiscal space. Olivier's fiscal space, rightly, is about the gap between real interest rates and real growth. And that's been very large for a long time. This is probably going to cut that by a third to a half. That doesn't mean the U.S. doesn't have fiscal space, but it means that we're more at risk than we've been for a very long time, and a bad shock to productivity, to revenue, or to interest rates could put us quickly into bad space. But additionally, if R-star, the shorthand for this, basically goes up, meaning that the gap between interest rates and growth shrinks, the Bolivias, the Sri Lankas, the Pakistans, lots of Central America, lots of South Asia, lots of Africa, they lose fiscal space.
When you have these discussions, is there a tipping point for 10-year yield, say, for borrowing costs in the United States, after which the current fiscal model becomes untenable?
Yes and no. Sorry to do it that way, Lisa. The yes is you can do some very fancy mathy stuff. Jeremy Zettelmeyer, now the head of Bruegel, who used to be at the IMF, and Olivier and others have worked on this, and you have to do simulations. But cold bottom line, the odds of your tipping go up, and probably go up non-linearly the closer you get to R minus G being 0, because this is the math. I mean, the basic math. Once that R minus G turns positive, meaning interest rates are outpacing growth, that's when the bad debt dynamics kick in. That's when, if you have debt to GDP, it's over 100%, it kicks in. Now, it's not a tipping point that happens, going back to where Tom started this week, this month. Maybe for Bolivia, not for the U.S. But if that turns out to be the case, that being rates above growth rates for 6 months, a year, then you start getting serious.
The bad politics has started. You mentioned that, the subsidies race between Europe and the United States. I still don't think this is getting enough coverage. You said it's very bad. Can you paint a picture as to why this is so bad?
So, as it happens, Olivier and I and some of our trade experts from Peterson, Chad Bown and Jeff Schott, were meeting with a European finance minister last night about this very issue. Basically, the problem with subsidies in trade is that it ends up being not just wasteful, that's bad, but as I've tried to argue in my article and as history shows us, it escalates very quickly. And this is what we're seeing. The U.S. puts out this IRA, which includes huge subsidies for particular companies, not just subsidies for green tech, not just subsidies for R&D. That would be nice, but subsidies for particular companies on a criteria of they have to be producing in the U.S. and mostly they have to be U.S. headquartered. And so then Europe says, okay, well, we'll do subsidies in retaliation. And then the UK says, already has, one of the opposition politicians, Miliband, came out and said, we got to keep up with this. We're not going to be left behind. We had the Indian finance minister at PIE on Monday, and she said, we're going to do subsidies. And so what you end up with is like an arms race. Everybody builds up. Nobody gains economy of scale. The competitive basis for having the winning company, say based on better technology, more efficient processes, doesn't win because you're subsidizing here and you're subsidizing here. And France says, we're not going to buy American, and America says, we're not going to buy French. And so you end up with this huge on-balance sheet obligation to the fiscal, to go back to where Lisa was. And one of the worst things about this is open-ended. So the way the U.S. passed the latest round of subsidies, it's driven by the consumer. It's how much you produce. It's not, oh, we're going to get to this level. You produce more, you get more subsidies. So this becomes a fiscal issue, as well as you run in place to just get to the same spot. And then finally, it's totally discriminatory against the rest of the world, because basically China, the EU, and the US can afford to do this. India can pretend to afford to do this. UK can pretend. And the rest of the world, you're out of luck.
It's done under the guise of supply chain resiliency.
Yeah.
And these phrases get thrown around and they take on a life of their own. It's almost just the truth. You have to get more resiliency into the supply chain, and that means you have to bring it home.
Yeah.
You've dismissed that straight up. I think you've said it's proven to be a fallacy through economic history, and I can think of several failed socialist communist states that have tried to do the same thing, and it's difficult to do. Is the United States, Europe, China, even if they have access to the funds, they can afford to do it? Who says it's going to be a success?
Well, thank you. I agree. There is a legitimate question to be raised as private supply chains have risen organically. Individual purchasing managers saying, I got an order from the CFO to cut costs 10%, so I'll outsource this. Oh, I've now outsourced this, so I know somebody else. There's a reasonable public policy interest in saying, let's not overdo that. But that's very different from saying bringing it home is safer. It's the same logic as your investor watchers say. Diversification matters. I think you mentioned all the communist countries. This is part of what I've been arguing. I mean, you look at Russia. Russia has spent 20 years trying to make itself self-sufficient just so it could go do things like invade Ukraine and not worry about it. And like the U.S., like China, it's huge, but it still doesn't work. It ends up backfiring. You end up with a corrupt industrial complex that doesn't give you what you need.
John, British headline, 2012, 11 years ago, business group economist to replace Archdove Posen at Bank of England. Do you have any advice, former MPC member, for Megan Green as she is anointed to, there'll be a coronation as she moves to the Bank of England?
Oh, I hadn't heard the news. Congratulations to Megan. That's great. The external members, including Catherine Mann, my former colleague, who's now one at the Bank of England, have a good record of genuinely giving independent thought. And you mentioned me as being characterized as the archdove a decade or 11 years ago. Of course, now I'm considered a hawk because I'm telling the Bank of England, you guys are whistling fantasies. Inflation's not coming down. So be data-driven, and everything will be okay. But I hadn't heard about Megan. That's great.
Adam, the external model at the Bank of England on the MPC, it's different to, say, the Federal Reserve. Why is that so important, and what lessons can we take from that? Mohamed El-Erian was talking to Tom and I about this on Friday. He said that the MPC model of having external members is helpful. Do you think it is?
I think it is. I fear it's not as helpful as it should be because sort of you look back at what the Bank of England has done or others with an external model versus what the Fed has done, and the differences aren't as great as I would like to think. But I do feel it's been important for the bank, both in terms of legitimacy, just that you end up having more split votes and more open discussion and debate, which is better for the public sense that this is hard, but they're taking it seriously. And occasionally you get things right a little faster because the external member's squeaky. You used to have, and still probably do, my former colleague Danny Blanchflower, who was quite squeaky, but also...
Blanchflower was the worst since Henry VIII, I think.
But in this particular instance, he was right. And I think history has shown I was probably right on some of the stuff I squeaked about while I was there. So it's useful.